Welcome to Banking on Community, a podcast that explores how community banks thrive with the leaders who run them. I'm your host, Deb Barnes, a banking strategist and AI advisor with 18 years in banking and financial services. I help banks transform through data, analytics, and automation. Today's guest is Mike Abernathy, President and CEO at Buckeye State Credit Union. He's been leading Buckeye State Credit Union for 7 years in Akron, Ohio, has had some great accomplishments, driving more than $1 million of profitability during his tenure, addressing some real challenges for government oversight in 2018, and expanding his vision across Northeast Ohio. Today's episode is focused on how Buckeye State Credit Union is protecting their members and building for Main Street. We're going to talk about fraud, youth empowerment, and building for Main Street. Let's get into it. Well, hi, Mike. Thank you for joining us. I'd love to get a quick overview about you and your company. Why don't you start with yourself, your background?
Well, my name is Mike Abernathy. I'm the president and CEO of Buckeye State Credit Union. Been with Buckeye State now for a little over 9 years. Been the CEO for about 7. Pretty much banking for the last 20. Believe it or not, spent a lot of those years actually on the bank side. But this has been my longest tenured spot. So Buckeye's an interesting story. And getting here is an interesting story because when I left a pretty large community bank back in 2015. I thought I was leaving banking behind. I went and started my own business. The business kind of got off to a fast start, was really enjoying myself. And then one of my peers from PNC Bank from several years back gave me a call and said, hey, I left PNC. I went to this credit union and I've been here for about a week and this thing's a dumpster fire and I need help. And this was back in February of 2016. I was like, well, I'm not looking to really interview and go, do a job or anything like that. I'm doing kind of fine what I'm doing. And she's like, you don't understand. I'm offering you the job. I need you to be here on Monday. We got to talking. I went and met her CEO at the time. And I was just like, well, can I keep my business? Because that was like my main focus at the time. I was like, I'll come do this if I can keep my business. And she's like, I don't care. I just need help. I was like, all right. And well, 9 years later, I'm still here. And I actually closed my business because this ended up becoming my passion. But Buckeye, we went through some really tough times. From 2014 through 2016, they lost $3 million. And it was very close to insolvency. I mean, I didn't realize when I stepped in the door just how bad it was. But we had to really take this collection of knowledge between a lot of us that were hired at the time to just try and figure out how do we pull the nose up on this thing and kick out. And so it was a wild ride because this credit union is an old credit union. I think we were established in 1933.
Okay.
Like that, we're really old. And we certainly didn't want to be the ones to fly it into the ground. So after all that, we've been putting up some record years, year after year after year. We haven't had a losing year since. And it's been an awesome ride since.
That's awesome. So you've told me a lot about your company already. Can you give me a little bit of how many members? We talked about the profit, last year around $1 million, assets under management. Give us a little bit of a scope sense.
Yeah, our membership runs about 17,000 members, assets under management, roughly 150 million. We've doubled in size in about the last 2.5 years. We are rapidly growing. We've really focused on organic growth. We did do a couple of really small mergers. They were in the $6 to $8 million range. We did another one that was about 20 million. We haven't done any big mergers. We've just really focused on really harnessing the communities we're already in. I think a lot of credit unions in the area have kind of struggled to grow, whereas we're just seeing people flying in the door. And a lot of the things we're focusing on is resonating. And it's just trying to simplify everything, make things as easy as possible, and just try and be as quick as possible. So to me, that's landing with a lot of the people in the community. We're not doing a ton of marketing. We're helping people that need help that sometimes the banks are leaving behind. and a lot of word of mouth is getting out there, and we're seeing a lot of people walk through the doors. So, at our asset size, it's going up almost every month. Membership is growing, so it's all good.
That's great news. Fantastic news. As I've talked to others, there is a struggle out there of maintaining relevance and being top of mind. And the spend of the big banks, you can't match. You got to be there in a different way. So
Yeah, you
that
gotta
resonates.
you gotta focus on not so much trying to beat the big banks. You gotta focus on finding your different. And I'm not gonna out commercial lend, Chase or PNC or Bank of America. They're gonna beat us 10 out of 10 times. And I know at my asset size, I shouldn't be trying to do that anyway. But what can I do? I know that Akron and Cleveland, Ohio is a blue collar area. So those folks a lot of times are ones that maybe they're not living paycheck to paycheck, but they're grinding a bit. Now, there are also folks that are low income and they're not living paycheck to paycheck, they're living day to day. So how do we specialize in helping them? So we tailor products to help those people. And at the end of the day, I've worked for Chase. I've worked for PNC. I know what it looks like. They're not real interested in helping those folks. They're not real interested in lending to somebody who might have 640 credit or 630 credit. That's just a little bit outside of their box. Well, for us, the way we use data and the way we look at it, we know how to structure deals at fair rates that's going to help them succeed and repay. So that's how we build loyalty and earn their business and earn their trust. And that's how we have taken this approach of really rapidly growing over the last several years, is just focusing on being different. Don't try and be better. Don't try and outbank the big banks. Focus on that niche where we can get better and just earn trust and earn loyalty.
Yeah, sounds like a strategy that's really working for you, given the growth you were sharing with me earlier. Okay, so what does a typical day look like for you? What's happening on your schedule on a typical day?
It's a little different every day, honestly. And what it looked like a few years ago doesn't look like it today. A few years ago, it was a lot more hands on, just trying to get things moving along and being a lot more engaged. I will tell you today, I hand a lot of it off to my staff. And I spend a lot more time steering the strategy. I spend a lot more time kind of reviewing what's going on and making sure that everything is where it needs to be and thinking about what comes next. So a lot of times I'm spending time trying to figure out where we're going to be 6 months from now, 12 months from now, 18 months from now, and trying to put those pieces in place as I have my team focusing on today. And if I'm focusing on stuff today, then there's a problem. And so as a CEO, I should not be caught up in a bunch of paperwork. I should not be caught up in doing daily tasks. And if I'm going to be successful, I have to constantly be thinking ahead. And so my job is always stay ahead. Always think multiple steps ahead, always be working multiple steps ahead. Then there's the aspect of I have to be working on advocacy for the credit union movement. So I'm very active with our trade association. So obviously trying to keep up on what are the growing trends that we need to keep up with. Sometimes I agree, sometimes I disagree. Sometimes I'm active with them, sometimes I'm not. There are things that I get very active with. There's some things where I back off, but advocacy is still a very important piece of my job. And then there's community involvement. This is an area I still need to grow in. I am very involved in community, but I need to grow beyond certain communities, meaning I can't just focus in one community. I need to get to more communities. So if I focus on future strategy, advocacy, and community involvement, that's really where I should be wrapping my time around and not so much on day-to-day operations. So that's really what I won't say my day, but that's how I kind of organize my life as a CEO.
Yeah, that's great. Thank you for that insight. And speaking of industry trends, so what are you seeing right now? What's going on in the industry that's changing or new or steady from before?
What we really should be arguing about is bringing the two together, bringing community banks like the ICBA and And America's credit unions should be coming together on two very specific topics, which is BSA reform. There's absolutely no reason why we should be doing CTRs at such low dollar amounts. It's ridiculous. That was created back in the 1970s. And with the amount of inflation since that, which is 50 years ago, there's absolutely no reason that we should still be doing CTRs at those levels. The other one is, fraud protection for financial institutions. The fact that we are footing the bill for any of the garbage from Commerce, where they are exposing, credit and debit card numbers, and then the fact that we have, members, or on the bank side, customers who are giving away their information to fraudsters, and yet we're gonna eat that cost. There has to be some level of accountability instead of giving us 100% of the blame and 100% of the cost. There has to be some reforms in that. But instead of us coming together and fighting as a united front, we're too busy fighting over something as stupid as tax status. So we have to get our act together as two different industries, but in the same ballpark with a common cause.
Yeah. Yeah, that's meaningful what you're saying there. And I was thinking about the BSA, the fraud front. So I definitely understand the dynamics there. Are you envisioning like sharing the risk with the e-commerce that breached? What are you envisioning there? Because that's an interesting idea.
Yeah, there has to be some. Now, I'm not the expert in this field, and I openly admit that. But there has to be some level of sharing of the responsibility. There has to be accountability. It can't just all fall on the financial institution. And we can go back for the last 10 years and think of all the places that had these big breaches. And in the end, when the fraudsters got the compromised numbers, it was always the bank or the credit union that took the loss. It's unfortunate because the retail and commerce lobbies seem to have way more influence with the legislators, and it always ends up coming back to us to absorb that loss. And we had nothing to do with it. So it's just very difficult. It's disappointing. But the reality is those are the areas where banking and credit unions should be coming together rather than arguing over silly stuff like tax status.
That makes sense. So how are those trends in particular impacting your business today?
Well, we do see fraud. I'm very proud of my team in that we've seen limited fraud. We train our team very well to identify, especially like elder abuse, romance fraud, lottery fraud. And we're seeing a lot of I don't want to call it Bitcoin fraud, but like just what am I trying to say here? Stable coin type of fraud.
Oh, yep.
Where people are like trying to get them to put money into like a Bitcoin ATM. And we're seeing some wild stuff right now. And so we've seen an uptick in fraud. It's not been enough that it's really rattling our organization, but we are definitely seeing a trend up, not so much with the debit cards or the credit cards, but just members coming in and just falling for scams. And as long as we're having good conversations, we're able to cut it off at a certain point. But there are just some people that they believe they've hit the lottery and they're desperate. And that's the hard part, is that these fraudsters, they seem to know the people that are in dire situations who are just desperate, and they're desperate to believe. They need this to be true because they're on the ledge. They absolutely need this money that they're being promised. And so they are going to just believe anything they're being told, and they're willing to risk whatever they have for it to be true. And so it's very hard, no matter what we try to explain to them, to say, you're being taken advantage of. This is a person who is committing fraud on you. But when you're in that mindset and you're desperate,
there's a lot of there's a situation.
Yep. So it's tough, and you empathize so much, but we can educate, we can provide facts, we can put it in front of them and show them that we've seen this, 1,000 times. This is absolutely fraud, but you can, what's the old saying? You can walk the horse to water, but you can't make them drink it. Unfortunately, we've seen a lot of people just, they've walked themselves right into a fraud situation, and then we're left, holding the bag.
Do you feel those education initiatives that you're talking about have had an impact for your membership? Like you have helped improve their literacy on the topic
Yeah.
and you're seeing it come through your fraud numbers?
Yeah, I think we help more than we lose. You remember the ones you lose, right? Because it's more of an emotional tug because you see that person because you know how desperate they are. And it hurts your heart to see somebody that is riding that line and you know how desperate they are. But you also see the folks that they come in and you educate them and the light bulb goes off and they realize it and they back off and that's a win. We just saved somebody a lot of money. And so we get far more wins than we get losses. But like I said, it's the ones you lose that kind of stick with you because it hits the heartstrings a bit.
What are the big value drivers in your business? What are the big income producers and then value for your members?
So where are the things that we focus on driving revenue? We absolutely focus on making things as easy as possible, as fast as possible. So we don't focus. We're not a big business banking type of organization. Now, that is a focus coming up in the next 12 to 18 months. But for now, we are very consumer centric.
Uh-huh.
Everything revolves around a consumer checking account and consumer lending.
Uh-huh.
And so, how do we master that? If you think that we are going to beat a fintech such as Chime, you can go online and open a checking account with Chime in like 2.5 minutes and you're done.
Uh-huh.
You're not going to beat that. But how can you differentiate from Chime? There is no personal interaction with Chime. If you have a question, there's no way to ask a question. You got to go to like an FAQ somewhere, and it's going to be a little bit more difficult. So how do we combat that and become different? We have gotten rid of all online applications, so loan or checking account or membership. We've just removed them. Why? Because there's a high rate of abandonment. Because a lot of times an application will take 5 to 10 minutes. And let's just say I can use my wife as an example. If she's wanting to sign up for something and she gets off work, she's trying to make dinner, my daughter's running around the house like a lunatic, and she's getting started on something and she's got a million distractions. And finally, she just pushes the laptop out of the way and is like, no, I'm done. I'm never going to finish it. We just noticed we had like 60 to 70% abandonment rate. So we switched it to a lead generation system called Simply Focused. You got 2 pages. That's it. And you just answer a handful of questions that you can get through in about 90 seconds to maybe 2 minutes. And it's almost a full application, but a lot of it's drop down, very quick type ins. You're done in 90 seconds to 2 minutes. And our goal is if it's during business hours, and some people do it from work, we try to get to it within 15 minutes to an hour. And what our objective is to send you a text message just acknowledging, hey, we got your request. How would you like to be communicated with? You want to text or you want to call? And if they want to keep texting, we'll text. If they would prefer a call, we'll call. Now, at some point, we have to talk to them, but we will do a lot of business just through text. But we will get that application pretty well set and run right through that technology. So we've already got most of the information through Simply Focused. We get a few more pieces of information. Loan application submitted. We use AI underwriting called Synaptic AI. So loan officer submits, underwriting gets it, makes sure everything's there, then submits to Synaptic. Spits out a recommendation in 3 seconds. And it gives all these different data points and parameters that we can look at, but it gives a recommend approve, recommend review, recommend decline. And so the underwriter then is going to spend 5 to 10 minutes reviewing it for a few things. We're not really going to second guess its decision. We're going to make sure that, because this is what the regulators want, make sure that there's no discriminatory practices. Make sure it's not redlining or doing anything funny in there. And we're just going to make sure that there's nothing silly. And we're going to make sure that there was no major misses, that it missed some information. 5 to 10 minutes. Okay, underwriter looks at it. There's no big misses. There's no discrimination in there. Boom. Send it back to the loan officer. It's been approved. Go ahead and schedule closing. And it's done very quickly, just like that. You can get done in like less than 45 minutes, probably.
That's great.
Sometimes
And I think the point you were saying too, people love it when they can stay on their digital as long as they can, but you took off the burden of I have to do it this second when
yeah,
you were talking about that interaction, right? So that's a really neat and differentiating approach.
yep. So what we're trying to accomplish through doing these things is you don't necessarily have to step into a branch. You can just do it all digitally. We're going to communicate with you through the whole way and tell you, hey, it's done. Do you want to close this thing remotely? We can send it to you via, eDoc or DocuSign, or do you want to come in and sign it? We have different ways of verifying your identity. We can get your 2 forms of ID uploaded. We have ways of getting challenge questions to also be like a third form of verifying your ID. So we have done all these different pathways to make it as easy as possible. But our goal is we're going to meet you where you want to be met. You want to come in and do business, we're here. But if you are just trying to, hey, I'm at work, I can't make it on your hours to apply for that loan or open that checking account, no problem. We will handle it all digitally. And it's not like some of the others where it's like an online application and I finish it all there. I can actually talk to somebody and I can actually text somebody and I don't have to be on the phone while I'm at work because I have to sit here and do one of these. I can sit here and text back and forth and it's very non-intrusive. So we are just meeting the member at every step of the way where they want to be met. That's where we're driving our revenue. That's where we're picking up our membership. And that's where we're meeting a lot of this growth because we are integrating traditional values with new technology. And it's been highly successful for what we're doing.
That sounds great. I really think that combination is not something I've seen. And so that's really unique. And I'm glad to hear it's working. You're saying, hey, we're seeing all this growth. What's been frustrating? What's been challenging lately?
If you'd asked me that, say, 4 or 5 months ago, I would have told you collections and delinquencies. It got really ugly around Christmas. Thanksgiving and Christmas, delinquencies were probably as bad as I've ever seen it with my time in the company. And it's funny because the last 45 days, it has got significantly better. My head of collections sent his report this morning, and our delinquencies are the lowest level they've been probably in 3.5 years. We're seeing a rapid turnaround in that area. So I would say there's always going to be some levels of concern with delinquency. You're always going to feel that headache. I would tell you the other area is still the high rate environment, not so much on the loans. We would still like to see the loans come down, but we kind of control that. We use a lot of data I don't want to say we ignore our competition, but we go through a formula where we use our historical loss ratios and we kind of figure out, because we lend to all credit tiers, we figure out what products at what credit tiers have the highest loss ratios and where our sweet spot is in each of those and what rate we need to be at to basically cover operating expenses or to beat, risk-free investments, and we price accordingly. And if we're attractive in the market, folks will come to us. So we're using a lot of this data on a monthly or, twice a month period to appropriately price our loans compared on our historical and credit risk profile. Or what we've done in the past. We have this, like I said, this historical loss
Performance, essentially, of
Yeah,
how those prior rates had done.
you got it.
Okay.
And so that is helping us price appropriately when it comes to a high rate environment. So we're able to price down compared to some of our peers who are just saying, well, what's Chase pricing and what's PNC pricing and what's the credit union down the road pricing? We don't pay attention to any of that. We price according to what spread do we want. And we know what kind of our credit risk is. So if we want to go 4% above our credit risk, just price here. Well, it just happens to be that if our credit risk is this on an auto loan and we want to get 4% above that, heck, we're beating most of the market right now. Where we are getting hurt on the rate environment is on dividend expense. Everybody's hurting on dividend expense right now because in order to attract, deposits, we've had to pay exponentially high cost to attract it. We have gone through a period of just retracting our rates down at it's almost like the theory of boiling a frog. They're already in the pot, so we're just kind of bringing it down slowly, slowly, slowly. But we're trying to get that expense down. That expense needs to come down. We're keeping CD rates relatively high, but we're finding that most folks are a little hesitant to lock up their funds. They like the money markets a lot better, so they can yank it out of there if they want. We don't want to jump out of having attractive rates altogether. But so far, we are seeing that our deposits are holding, and we're actually growing deposits. So that's not even as much of a headache as it used to be. So as we've been reducing rates, deposits have still been growing. So I don't really have a whole lot to complain about. I feel like, again, if you'd asked me in November, December, I was sweating bullets. But coming out of March and now we're halfway through April, I feel really good about where we're at and where we're headed.
That's great. So, talking about the future, where we're headed, where do you want to be 12 months from now?
I would really like for us to obviously continue growing, get our asset sizes, get our asset size up to 160, 165. That may be a pipe dream, but I would rather put a little bit of a higher number on that than undersell our folks. I would like for us to be getting into small business banking. I think there is a desperate need, especially in the Akron, Cleveland market, for not commercial banking. There's plenty of commercial banking. Somebody that's going to lend to Dan in the van or Chuck in the truck. Somebody that needs something between 25,000 and maybe 200,000. I don't need to do $1 million loans. They need somebody who's going to focus on very small business loans, business credit cards, and give them some cash management solutions that aren't going to break the bank. And even though you're going to hear some of the banks talk that they could do that stuff, a lot of times what you're going to find is the one man Chuck in the truck is not necessarily welcomed at all the banks, because they don't have 10 or 15 employees that the banks can make money off of. For us, we would rather be at the ground level with that guy and help them get their start and help them launch. That's going to be where we need to be. So my vision, 12 months from now, 18 months from now is let's build that program and let's give those guys seed money. If it's a landscaper and they need an extra mower, they need 2 mowers, let's be the one that's giving them the money to get rolling on. If let's say it's a plumber and this plumber has just grown beyond, what he can do by himself. And now he needs to buy another van. We need to be the one that's getting him the van or some working capital. That's not a commercial loan. That's a guy who probably needs $100,000. So that's where we need to step in and fill a void that no other bank's going to do, because they don't want to write $100,000 loans. They want to write $500,000 to $20 million. So we need to fill a desperately needed void in the market for these smaller businesses that are the foundation of our society. And that's where we need to come in, and that's where we need to be in 12 to 18 months.
Yeah, I love that. It's funny, as I've talked to other leaders like yourself, you realize what a human interest story, community banking and credit unions really live, or they're there for those people in that town trying to make their lives better together. And I love to hear, your vision there to help on the small business side as well. That's really fantastic. So what's keeping you from getting there?
I'd say just trying to balance out some of our time and resources. We're going through a core conversion change right now. We'll be done on Labor Day. So we're a little hesitant to start new programs and new products in the middle of that. Doesn't mean that I can't start, which I've already done, start writing it out. This is what it's going to look like, and then try to hit the ground running after we're done. But also just making sure that right now there's still some uncertainty with what's going on in the world, overcommitting resources, and making sure that as we get to September, October, November, what does the world look like? The world of the tariff right now is different. I'm not too concerned. I'm not seeing it impacting Main Street. Credit unions live on Main Street, not Wall Street. We don't play in that game. On Main Street, America, where credit unions live, are folks that walk in the door, it's business as usual. So, but we don't know what the trickle down effect will be, over the next 30, 60, 90 days. So it's very important to understand, what businesses are going to be impacted long term, and understand how's it going to affect, our local economy. Because again, it's a very blue collar economy, a lot of manufacturing and factories in this area. So, our president is very focused on Main Street manufacturing, trying to bring it back to the United States. But will that have, some negative impact in the short term while we try to rebuild in the long term? So those are things that could also delay us trying to rebuild in the short term.
Are you thinking about products or how you're going to help them from here to there? If it's a 3-month, things get way more expensive. People are struggling to pay all their bills. I can see that being a real challenge for, it may not be forever, but for a few months.
So that's a great question. We have a lot of holdover products from COVID that they're not active right now, but can be easily activated pretty quick. Obviously, if people start falling behind, get delinquent, getting those calls, hey, I've been laid off, there's a lot of collections tools at our disposal that we can certainly go into, some forbearance, deferrals. We can certainly do things that can help delay until they can get back on their feet. Obviously, we can't go into something forever, but we do recognize that if things do get bad, that we have some tools at our disposal that we can work our way into. We do have several small dollar loan programs that we can work our way into. So we're certainly prepared in that, and that we can dust off the COVID playbook and jump right back in and be prepared to help everybody. So we're ready.
That's a great news story. So if you could solve one challenge today, what would it be?
Well, one challenge we are going to solve is getting financial services into the hands of younger people. And we are going to take some risk, and that we are going to start opening accounts for underage folks. So we already have what's called a youth empowerment account, which is generally it's controlled by the parent, but that's really designed for, say, the 11, 12, 13-year-old who gets Christmas money or birthday money, and you got to put it somewhere. And that's kind of your introduction to banking. We are moving in a direction of, we want to give kind of a full service account starting at 16 years old. And we've talked about it with our attorneys, and we recognize there is risk. You can't collect on a 16 or 17-year-old, but we're finding that in this environment, there are far more 16-year-olds now and 17-year-olds who are working, who are becoming far more independent than, say, in my day. And especially in our area, there are a lot of at-risk children who are dealing with generational poverty, and they have parents who are not reliable. And the minute you put a parent on an account with them, their parents will steal the money. And so the only way you can combat generational poverty and give that child an opportunity to make it on their own and escape those patterns, and to escape their parent from stealing their money from them, is to give them that independence. And so we are in the midst of creating those accounts, knowing that we are taking a risk, but it's a risk we're willing to take, so that they can have some of that independence. And there's going to be education that comes along with it. There's, they're understanding that, we're opting your debit card out, so you can't overdraft it. So there are going to be some restrictions on it, but we're giving you the opportunity that there's nobody controlling it for you. You're controlling it. You're driving this thing. And so when you're dealing with so many of these issues where you have all this generational poverty, and you have some folks that are not the best role models, you have to do your best to give these folks a chance. And we have other programs that this aligns with, because we have a student credit card, for example. So when you turn 18, we have a credit card, no cosigner. We have a first-time auto loan, program where you don't need a cosigner. We are committed to ending generational poverty, so you don't have to rely on somebody that may not be the best influence, that could potentially hurt your financial future. We're giving you some upfront independence. You're going to get some education when you're going through it, but we're going to give you these tools to get started, so that you have every opportunity to climb out of whatever situation you're in and make it on your own. So that's something that we're very passionate about, and something that we are trying to solve in our area.
I mean, that's the real future, right? That's like helping the future of your town, of your community, get on level footing for the first time. That's really incredible. Okay, so this has been really great. I appreciate all the insights. Before we wrap, do you have any final thoughts? Anything you wanted to share that we didn't get to?
I would just say that, credit unions are an incredible place to be. And I think that there's a big common misconception. I think that credit unions don't do a good job of communicating what we are. And I think a lot of folks think that credit unions are where you go if you got bad credit or if you're poor. Some people think, oh, credit union membership means I got to pay like a gym membership fee or a country club membership fee, and maybe I don't want to pay that type of. It's nothing more than like going to a bank. I know that credit unions try so hard to say we're different than banks. We are 97% the same in operation. You open up a share account for $5 and it sits in there. It's just a savings account that has $5. That's it. And when you close your account, you get the $5 back. So you're not paying a fee to get in. It is a very easy way to enter. And what we focus on is our profits are not going back to a shareholder on Wall Street or a private group of owners who may own the bank. It's reinvested back into the company. That's why we're a not-for-profit. It comes back into the company, and it's retained earnings, which go into better interest rates, whether it's on the loan side or on the deposit side. But it allows us to continue to operate and provide, services at a different level. So that to me has to be the message that we're getting out there is the barrier that you may perceive as there is not. We're not a gym membership, and
we're not going to charge you every month for the rest of your life.
We are not Planet Fitness. And the fact is you don't have to have poor credit, and you don't have to be poor. In fact, we have a lot of folks that are affluent, that understand the credit union model, that join the credit union because they're passionate about knowing that the money they deposit is actually going to something good, because they know that their money is going to maybe go to a loan for somebody that really genuinely needs it, not to enrich some other person on Wall Street. That these affluent people are putting their money in there knowing that there might be a person with 600 credit that desperately needs this loan to get to that next stage in their life. So there is almost a philanthropic feeling to it. So that's kind of my final case. And I think that people should be thinking about credit unions in a different way, and not just necessarily as, the gym membership or the place you go if you're poor or have bad.
Thank you so much for tuning in today. And thank you to Mike for joining us. Mike, your quote, "We're committed to ending generational poverty," really resonates. I hope that you and Buckeye State Credit Union have wild success on this front. Thanks again. We'll see you next time.